Our next guest is warning about chasing this, though. He says, don't get too excited. It may not be the all clear here. Let's bring in Dan Niles. He's the founder and portfolio manager at Niles Investment Management. Dan, before we just jump into the software piece of this, what do you make of the broader market sell-off? The Iran war, the higher oil prices, higher yields now that we have to contend with. Do you just look past that?
You can't look past it, obviously, Kelly. But I think what we're all trying to figure out is this a short war, meaning less than a month? Or is it sort of medium term, which is a bigger problem? Or does it last for a long time, in which case I'm talking oil above 100, at which point you're probably going to end up with a global recession. So I think that's what everybody's trying to figure out. I'm more in the camp that this is more in the span of hopefully a month. But if you go back to when Russia invaded the Ukraine, that was February of 2022. It's been 5 years. And it's still going on. But the good news is oil prices, after initial issues, obviously were well contained. And so the economy went on just fine. But if you're looking for the bull case, you can go back to Russia's invasion of the Ukraine and the fact that the market ripped during 2022 anyway, despite there being no end in sight.
Later in the year, we had a nice little thing called ChatGPT that came on the scene. Dan, a lot of people are pointing out the irony that in the time since the conflict has broken out, you have software technology outperforming. I mean, those would not have been the obvious trades. Even if, this is what we always say, if someone had told you the news and then said how to trade it, I don't think a lot of people would have said, oh, go pick up software in the Mag 7.
Well, if you look at what I wrote on Sunday, I thought the rally in software would continue. And then I put out a note yesterday as well on X talking about the fact that I thought it would continue. Because even if you assume everything that Citrini Research said at the beginning of last week is correct, and then you saw Block go ahead and lay off 40% of their workforce, and they said it was AI. And this all happened last week. The software index finished the week up 1%. The S&P was down 0.4, and that's why I wrote, I thought this could continue. And even if you believe that this is, the end of software and it's going to continue to go down, and so you use the 0102 analogy, when the S&P was down 49% over 2.5 years, you still had 7 rallies that averaged 14% each in the S&P 500 that occurred over 2 months on average. Those are huge moves. So my feeling with software is, and that's why I have a lot of my exposure right now, because my belief was in the short term, you would get this kind of rally, and that has continued. And if you look at IGV as the example of that, which is the software ETF, it has been bought open to close, if it closed here, for 8 straight days. It's been on better than average volume. And so at a certain point you go, yeah, 35% sell-off from September to its lows. You're going to get a counter trend rally, and could it gain back half of that? That's kind of what happens during these vicious sell-offs, even if this is not the bottom.
The NASDAQ 100 is down 1.7% this year. The S&P small cap 600 and mid caps are higher. And we are at war. I understand the old adage, you buy at the sound of cannons. I get it. But I just feel like, does it feel like to you, Dan, that the markets are overly complacent, given that we are in the real position of running out in the world, not in America, of pretty significant commodities if this continues for a couple of weeks?
Well, that's true, Brian, but you could go back to Russia, Ukraine, and have come up with the same conclusion, right? There's a lot of rare earth minerals, agricultural stuff coming out of the Ukraine. And so that was the fear. What did 2022 end up doing? It ended up being up 27%. Even so, you can look at this. And so I always say it's not the news. It's the reaction to the news that matters, because people will make up reasons to support why the stocks are doing what they're doing. Usually price leads the narrative. It's not the other way around. You really need to be more diversified and broadly diversified, and what sectors aren't going to get wiped out by obsolescence due to AI and what has a lot of heavy assets.
Right.
I think if you have that kind of mix, you can get through this period in much better shape, much like you have so far.